Hi all, welcome to TCM Education. In this video we're going to round up what happened yesterday, the first day of the week, Monday, July 14, on the Nasdaq and the New York Stock Exchange. Let's start first with obviously the most important, the S&P 500 and the price action, which was really let's not call it boring, but totally subpar. So what happened yesterday? So we started with a gap down in the S&P, closed or traded as, sorry, that's obviously that's the gap on Friday. So let's go back. That's the small gap down yesterday. Again, Trump's issues with tariffs, and we started and moved down and created a low here at 621 or 60 or 70. Let me see how much. 621.80. That was the low of the day. That happened after 15 minutes of trading. Since then until the close, it basically trended higher, establishing higher lows but not necessarily higher highs. All of that in a $3, pretty much a $3 range. So top to bottom we moved $3. That's roughly, in terms of percentage move, that's 0.5% range on the S&P. That means that if we're trading a $10 stock, okay, 0.5%, 1% of $10 is 10 cents, 0.5% is 5 cents. So imagine trading a stock that's whole trading day is 5 cents. That's ridiculous. You're not going to trade it. Anyway, despite that, we felt, and you'll see immediately, that this actual movement in the S&P, which is again very powerful, had an influence on stocks, and therefore when you were looking for intraday trades, obviously as a day trader or short-term trader or swing trader, almost nothing happening on the downside on the market, and plenty, or not plenty, but a lot happening versus the downside on the plus side of the market. Again, not necessarily because of the S&P, but that's how I felt yesterday, because again it matters if we are going to an earnings season. Obviously the earnings season starts today, so there were almost no earnings yesterday. A very strong or a very weak, in our case, neither happened sector that was likely to influence the rest of the market. So we basically had a calm move higher, almost back to all-time highs, which are you can see posted here on the chart at 626.87. That's all-time highs. So if we want to summarize the SPY, a bit let's say a bit sleepy. Okay, now let's move into individual stocks. And if you want to see what happened in individual stocks, let's go first to the leadership. And see if there was any important name that really did or did not. So if I'm looking at the best performing stock on my watch list that belongs to the leadership of the Nasdaq, here it is. That's Palantir. Let's go back to the 3-minute chart, because we're looking now at an individual stock. So you can see a small gap up in the morning, and then a trend higher. Basically, while it's hard to pinpoint one clear entry point in Palantir, the trend was clear as it can get. So the trend was higher, establishing higher lows, and then trending into the close in a channel, and closing at the highs of the day. So very strong day for Palantir, which is let me see if it is at all-time highs or near all-time highs. Should be there. Okay, actually it closed. Wow, it closed at all-time highs for the stock. Wow. And that's approaching the critical 150. Guys, watch the 150 in Palantir. Unless it gaps overnight over the 150, this is going to be a fight here, and maybe way more upside if it breaks it cleanly. Again, that's technical, has nothing to do with the amazing fundamentals of these stocks. And again, profit taking always come into fruition when the stock is at all-time highs. So that's clear. Okay, so that's the best performing stock. The worst performing stock was Apple, down 1.2%. And the price action in Apple, I mean, you can hardly see the bar here, barely moving down more than 1%, but totally lackluster in terms of trading. Again, probably because of the tariffs or the upcoming tariffs and the lack of clarity on the tariffs. I mean, Donald Trump is behind this move clearly. So again, if we want to summarize the winners and losers, one winner in the big out of the big names, and that's pretty much it. Now let's move to the real winners. Yesterday I go to the screeners and screen for basic longs. You can see the screen here. I will explain the list immediately and what stands behind them, the reasoning here. First of all, you see here a dynamic screener where I can change the parameters, and I talked about this screener from Mumu plenty of times. There are way many others in the market. TradingView has a screener. I'm using this one because it's really amazing. But again, if you don't have an account with Mumu, use the account. I mean, I don't know which, and I mean, there are so many ways to trade in the US and outside of the US. I mean, you need, though, in order to peak and reach your potential as a day trader, you need to fine-tune your screening. Super important. Too bad I discovered it so late in my career, but I discovered it. So again, how do you take advantage? You focus out of 6,000 stocks on a bunch of stocks. Maybe it's 5. You can maybe it's 10. You can increase and decrease the number of stocks in the list by playing with the parameters here. So 14, it's not necessarily 14. Sometimes you immediately rule out 1 or 2 because of their spreads, because of their pattern, because of their huge gap, and many other reasons. The same goes when you're looking for shorts. So basically, if the trend in the S&P is higher, and that's what we established in the last couple of minutes, let's look for longs. And again, if we look at this bunch of lists, we have here stocks. Let me arrange them according to percentage change. We have NBIS up 17%, METC up 15%, and the bunch the minimum here is 5%. And of course, this parameter, which is crucial to our search, that's the range percentage. What happened here? Hold on a second, guys. This number is crucial. Okay, so we want this range percentage number to be as high as possible, because as day traders, this is where you make your money, on the intraday price action, not including the gap. So if a stock gaps up 10%, it's not included in this number. The number this one measures the dollars or the percentages from the highs to the lows. The gap is nothing, and we gain 0 from the gap. I mean, we're not in any position. How can we gain from the gap? It's not possible. Obviously, we don't want to gain from the gap on one stock and lose on the other. So this number is crucial. Range percentage is crucial. Volume is static. We can, and as you can see, we want to trade very liquid stocks. I put the number here at 5 million. This one is above 5% percentage change, and that of course doesn't mean that the stock cannot be up 10 and then disappear when it's going down 4% from the list. Okay, but on the other hand, the range percentages stay, and the volume, what it's reached its peak here, 5 million, stays. So those numbers stay on the list. Stocks can disappear from the change because of the change percentage, and if they go below 15, but that's not a important factor for us. It's just an eliminating factor. Okay, so now let's look at the stocks. Number 1, METC. Let's take a look at the intraday price action. Sorry, NBIS. Number 1 is NBIS. Let's take a look at the price action. Now, on paper, looks horrible. The stock gaps up like 10% in the first minutes, moves sideways, but pay attention closely. Has clear support at 48.80. Clear support here at 48.80. Now, how do you observe the clear support at 48.80? You look at it very carefully, and if you can observe it, you have a trade. If you don't observe it, obviously you don't have it. You're not going to have a trade, or you have a trade at 50. Again, a trade at 50 is legitimate, but you're missing almost on $1 of profits here. Okay, and of course, what is the risk at 50? Almost $1, meaning 2%, and here the risk is 0.5%. So you turn a 0.5% trade here, and I'm not saying necessarily that the entry is 49. It can be 48.90. Then you risk only 10 cents. Okay, so the problem with this trade that it is too good on one hand, and it's very hard to observe on the other. So if you don't observe it, tough luck. You're not going to make 20-cent risk into a $2 move, and that's exactly what's happening here. Now, how many times and how many stocks you need to search to observe such a risk reward? Do it yourself, guys. I give you the whole weekend. It's not going to be very easy. Okay, it's going to be very hard to figure out such a risk reward intraday. That's 10 to 1 intraday. It can be 20 to 1, but let's not exaggerate. Okay, so round number entry, 20 cents of risk. You can buy here, or 0.5% of risk. You can buy here 1,000 shares or 50 shares. You can buy here a position of $20,000 or $50,000. It's your personal decision how much to buy, but the risk is clear: 20 cents if you buy at 49. It doesn't need to be 30 cents or 50 cents. And this is actually a demonstration of how a day trading, how a trade can work for day traders. Okay, that's something that I have to say. I'm sorry, it doesn't happen very often. I wish it would happen every day. Then our life would have been way easier, way easier as a day trader. But again, we made our life easier by compiling the list of winners, first going to the number one winner and acknowledging it, and then the stock did the job. I mean, sometimes the stocks don't do the job. I mean, there is always a scenario where the stock moves up 10 cents and drops $2 or $1, whatever it losing scenarios are on the table all the time. You know that, I know that, anybody that trades knows it. Okay, so that's a great example of what a day trader can achieve given the right, let's call it either trade management and search management. So we have this one. Let's take a look at number 3. Stock number 3, the symbol was NewScale. Pretty much the same. Amazing move in the morning session. So it gets into the list. Then it pulls back. Now this one is way trickier, because the first move, you can see the first move higher, which was a cup breakout, is a failure. Here you lose either 0.5% or 1%, depends where your stop loss is. Let's say you lose a full 1%, which is shameful. But again, we're not immune to losses. However, take a look at the second move. So the stock reaches a high, pulls back, and now creates over half an hour of trading. And this is happening, guys, over lunch. Let me show you how accurate it is. You can see here the build up between 12 and the move 12:20. Okay, it's 21 minutes. It's not half an hour. A little bit less than half an hour. But you can see 7 bars of 3-minute bars here, where the support and the resistance are clear and are 25 cents apart. And again, if you don't observe, you need to buy it at 39.60. In that case, it works. Okay, so, but what is the risk at 39.60? Maybe 30 cents, maybe 60 cents. It's not really clear what is the risk here. Where is the stop loss? Okay, not clear. So you may not take the trade, but here the risk is clear as it can be. Okay, and you have the time to prepare yourself. You have 21 minutes to prepare. And again, you're not ready. You're not going to make this trade, or you're going to take this trade with a lot of more risk, or maybe join this move higher. But again, when you join higher, you don't have the risk. You don't have the management. Most likely, obviously in this case it was a joiner, but not as easy as trading this move higher. So from 38 to 40 to 80, that's $4. That's 10% intraday. 10% intraday. How many times can you trade a stock 10% intraday, and the risk is 0.5%? That's it's not 10 to 1, that's 20 to 1 in terms of risk reward. So that makes it probably the best trade yesterday. And there were plenty of other trades. Just let me show you without over managing them too much. Take a look at Circle. Not very easy to day trade, but a breakout late in the day over 200, and HIMS, where you could have traded this consolidation or this VWAP reversal or near VWAP reversal. Again, not very easy. This one is way easier when you trade this 51.20, 40 cents of risk here on a trade. Again, late in the day, but the algos are working until 4 p.m. So the excuse that we had in the past, the market is not doing anything after 2 p.m. Everybody's gone and sleeping after a heavy lunch. It doesn't pan out anymore. It's not very hard to work until 3:30 or 4, and we start basically a 6-hour trading day with a break over lunch. That's the job. I mean, day trading from the beach, I think pretty much everybody understands that this is not possible, or should understand. Or QUBT, again, great uptrend, very tough to figure out an entry point, and the list goes on and on. This is an example where I posted this potential 1750 entry, and the stock, as you can see, huge move in the morning, then it dies. It happens. So this trade is not there is no trade here, but obviously anybody that was looking at this trade, okay, no trade. And the last example, the stock that we are watching day in and day out, and should be watching day in and day out, this ASTS from the VWAP. I didn't even post a trade on it because it's so trivial. Okay, guys, thanks for being here with us. This was another educational video from TSM. Please join us in our mentoring course if you're interested, and if not, do like and subscribe, and we'll see you in our next video. Thank you. Hold on a second, guys. One important reminder, very important trading day today. We have the earnings kicking off today, and being that we are waiting for this timing, super important. We're going to have a session on earnings early on, anywhere between 9 and 9:30. We have the CPI number before the bell, so it should be, at least on paper, a super interesting trading session. Okay, guys, good luck today, and we'll see you in our next video.